In addition to the IPO range and sharp peaks at all-time highs, several patterns provide additional information. These include gaps, a double bottom, and a head and shoulders. The bullish reversal into 2015 is from an upward channel. Since there are 5 small upswings, it couldn't be called an inclined triple bottom. It also sounds strange to say inclined flat bottom range, so it is a case where an upward channel starts a bullish reversal. As constant selling pushes to new lows, a triple top forms in more of a bearish continuation context. It is right around the approximate area of greater resistance potential from the descending trend line and 3066 level intersecting. The bearish start after the IPO was in fact accelerated by an enormous descending triangle formation. Naturally, another sizable uptrend is possible heading into July 2017 as new lows hold, and the initial long-term downtrend lines are crossed. Most of the new ranges and levels are derived from clear swing points and gaps. The next milestone for the bullish recovery is in early 2018 when the descending triangle's resistance is overcome with a gap. This is of course the area around its descending trend line and wide base. Not surprisingly, the IPO range halts the uptrend with a sharp triple top that even presents a slight decline prior to the gap down acceleration. The triple top's lower boundary was extended due to the small gap up before its formation, but that is of little consequence after the gap down, which was later filled with expected bearish results in 2019. Similar to the triple top, the head and shoulders has its neckline expanded due to a small gap up before its formation. The crossing of the head and shoulders downtrend line and the emerging uptrend marks the approximate point in early 2020 when the bullish acceleration began to fill in the gap down. Prompt resistance at the gap fill and neckline range leads to the normal outcome of an even more bearish reversal. A declined double top provides a helpful guide to gauge when a recovery makes more progress in late April. The new uptrend line is more of a regular bullish reversal stemming from the bull hammer in mid-March. There are aspects of an inclined double bottom, but the two upswings have less overlap between the ranges of the bullish reversal candles for strict inclined double bottom features. Then there is a more stable lower uptrend line plotted through a later upswing towards the end of June. A clear upward channel develops with the upper boundary becoming less valid after being crossed with volatile price action and later a bullish acceleration. The lower boundary is not breached and maintains a highly valid uptrend line. The lower uptrend line is certainly precise, as it is the site of an upswing in early 2021. This was after a less common combination of a small gap up and flat top, transitioning into a gradual rounded top. Just like any double, triple, or flat top, a bearish acceleration takes place after the lower boundary is broken. Interestingly, new highs are reached after a precise gap up candle opens on the old 65.97 level. Price action is neatly contained within the rounded top. For extra validity as a bearish reversal range, it was more of a bearish retracement stabilizing the larger uptrend. Naturally, the gap up fill and lower uptrend line stand out as major long-term landmarks from which to reference support.